If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Absolutely incredible from Hbar. This is exactly what we were waiting for and what we were predicting very early on. If you remember, a couple days back on Monday, we got rejected after meeting my technical target here at the golden pocket. So target met. Once that happens, we usually retrace. That is why we came back down. And I told you guys specifically that this is the level that it needs to come back to anyway. It's the moving averages that have just formed a bullish cross on the 4 hour. So we are expecting an uptrend continuation. That is the specific reason that from this 6.1 cent level, I was suggesting we would come back and break this high. Essentially, all we need to see is over the last few days, the continuation. And we got that. Absolutely incredible. This was a move from this point over here to the top, an 11% move where we peaked out, 15% move given here for free on the channel. So make sure you continue to stay tuned. In today's update, we're going to talk about a potential 200% move that could be on the verge of happening if we can break a certain key level. Please stay tuned, like, subscribe, comment and share so we can hit 7.5k before the end of this year. And if you want to get educated by myself so you can learn how to predict these moves and take profit on them, then of course use the links down below. There will also be a clip at the end of this video explaining everything. So nice to see that our 1 fib level target has been met. Unfortunately, we didn't see the follow through. We saw a candle breaking through, but we didn't see it confirmed as support on the 1 fib level. That's what we really need to see for continuation higher. Right now, we're seeing a dump, and all I would say from this is that it's a bullish dump. Why am I saying that? Because we're above the moving averages, and these act just state what trend it is in. Essentially, we're in an uptrend. We're above all key moving averages, and we've explained many times on the channel that as long as we're above the 200 EMA, we're going to break this high. It's finally come. So essentially, now that we've set that new higher high with the body and the wick being higher than this highest body and this highest wick, we've created the reversal wave, which is what we were saying in the past few updates. So if we continue to be in that reversal wave, which would suggest the 0.5 Fibonacci here at 6.3 cent needs to hold, we will see further targets to the upside, which we've previously mentioned up here at the 1618 of 7.6 cent. If I now go to the daily time frame, that 7.6 cent is this previous daily resistance. And again, this is an area that we've been focused on for the past month or two, and we were struggling around this area. But very early on, all the way back down here, we were suggesting this pump, and eventually once this is creating the reversal wave, expecting a pump all the way back up to the 7.6 cent area. We're now seeing this all come to fruition. As you're now aware, on the 786 fib on the daily time frame, that's where we've previously had our highest body candle close out of this range. So for us to really get going, we need to see the 786 broken, 6.7 cent, 6.79 cent. That's exactly where we are today. So place your fibs from this peak August 15th to this low 12th of October. Then you have the same fibs as me. And then we know that as this was confirmed as support, we're looking to eventually break through this level to head up to even higher technical targets beyond 7.6 cent. Here we have a 10.5 cent technical target and a 16 cent technical target. Now, it's all well showing you these, but what is the process of getting up there? Is there any further confluence suggesting that we could get up there? Now this is where I need to zoom out to the 5-day time frame. If you don't have the paid for version of TradingView, just use the weekly. The only difference is sometimes the signals can appear earlier on the 5-day than the weekly, so it's like a precursor signal for the weekly time frame essentially. So right down here, if we look, just pretend it's the weekly, but it isn't. We're about to form this bullish cross, a suggestion that we want to go into a bull market. Now, if we go to the weekly time frame, we can see that it's a bit further away, that bullish cross from happening. So that's why, as I mentioned, this is a bit of an earlier indication of what is going to happen. We can see that this is about to cross over, and that for that further continuation, we need to break through that 200 EMA on the 5-day time frame, and this is sitting at 8.5 cent. It's essentially marking out the resistance of this range for us. So we can actually see that the resistance from this range is coming from right over there. So I'm just going to draw a box to that wick. Boom. So we need to break through this key area for the continuation to the technical targets. Now I'm going to zoom out for you, and the reason why I'm doing so is because I need to place a fib from the bull market top at 58 cent to our bear market bottom at 3.6 cent. What a dump that was. Finally, we now start to see early signs that we are turning this around. We need to see the bullish cross. Right there was the last time we saw it on the 5-day time frame. In fact, the only time. And look what it resulted in, guys. We went from let's just go from the break above. As we were at 3.6 cent, pretty much where we bottomed out at. We just fell back to the bullish cross. So we essentially had this signal at 3.6 cent, and we peaked out at 58 cent. So we cannot ignore these signals, and it's about to flash for the second time in its history. So Hbar holders, get ready. If you're not prepared, start getting prepared. So why am I talking about this potential 200% move? So I've already shown you the levels that need to be broken, right? We were on the 4-hour, the daily, and now we're on the 5-day time frame, where we also marked out this level of resistance of the range that we are within. And at that same location, we have the 200 EMA, which is signaling what trend this is in. I'm going to remove the drawings real quick. So as we are beneath it, we use this as our top of the market. If we can push through, it becomes the bottom. So that's what needs to happen in order to get this bull market. But very early signs that this could be potentially happening is a bullish cross, because we've had attempts of breaking out above the 200 EMA. You don't even have to touch it as resistance. But if you do get up there, it's like an optimal exit point for bullish trades or to get out. Now, equally, if we break through and confirming as support, that's your optimal entry point for buy positions or long-term investments. Now, the precursor signal for that to happen is a bullish cross. And remember, this will be the second time in its history. So it's likely that it will result eventually in the further breakout. We can also see from here, one bottom, neckline, second bottom, and we're trying to break out right now. We've broken the neckline. So we're looking for that continuation higher. Once we pump up into there, you're actually coming not only into this resistance, but it's the neckline of an even larger double bottom. One bottom, neckline, second bottom over here. This whole area is the second bottom. I know that we just marked out this double bottom within that, but it is also a much larger one as well. And it's suggesting that once we validate, well, we have validated, once we meet this smaller one's target, we're going to reach the neckline of the even larger one, and then probably will fall back to see if the bullish cross that does form actually is confirmed. We haven't yet seen the bullish cross. I'm just anticipating that it does occur. We don't want Bitcoin tanking, essentially. Otherwise, if we fall back underneath the moving averages, it will just be like the last few times around, where it does result in a fake out. But now let's find some confluences with that 200% target. So from the fibs we have at the moment, we've broken through the golden pocket. This was the daily analysis, and this is a suggestion that when we get up to this high of our range, that is a 56% move. So that's all well. But now let's take a look at our highest Fibonacci target out of this move. This is sitting at 150% gain. Now, where's this 200% coming from? So we are now finding technical targets to the upside that's sending us into the golden pocket. So when we do bottom out, any market, any crypto, any chart, any altcoin, when you have your bull market top and bear market bottom given, you place your fibs, it gives you around the halfway point, which is the golden pocket. And to enter a bull market, you need to break through that level. So it obviously is an area where you usually would get rejected. I'm going to show you this right now. You have a big move down. Essentially, wouldn't just move down in a straight line. It's going to come down, it's going to go back up, and it's going to continue lower. Now, this move up is into a golden pocket. I would place my fib from this peak to this low, and it would say about the halfway point, the golden pocket. That will be your optimal entry point for shorts or to get out. That's what you'll see at the bull market top. Dead cat bounces is what it's called. So if that is the case, when we're looking at downtrends, they have like a halfway point which you're meant to run into for further lows. Can you go ahead and invalidate that? Well, for a bull market, you do need to go ahead and invalidate that. Let's mark out the golden pocket. Now, this is the path it should take. However, to enter a bull market, you need to get out of the bear market. The only way to do so is by invalidating that. So if we're looking for continuation lower, and let's pretend this is the bear market bottom. If we're looking for continuation lower, we need to get a rejection. At that point of coming down, there will be an opposite golden pocket. Boom. Which we can hold as support actually taking out the previous one as resistance, flipping it to support, creating the reversal wave, and that's how you enter a bull market essentially. So it's a long way away, guys, because at the moment we're in the process of getting up into there. And then the question is, will we see new lows? Because initially we're looking at a wave down. This is the correction up and continuation lower. What I want to see on this wave up is us topping around the golden pocket area, falling back to our range high, this double bottom neckline as support, and then getting that follow through, invalidating further continuation to new lows below 3.5 cents. That will not happen, because to enter a bull market, you need to see this being flipped in support. So I'd assume we get rejected at first, fall back, and then break through, confirm it as support for the continuation. So there's a long way ahead, guys. But it's quite exciting because we know the path that Hbar now needs to take in order to get into a bull market. Now, the golden pocket from today's price sits at a 220% gain. So even before the bull market on a technicality has started for Hbar, because you need to break the golden pocket in order to validate these targets to the upside between $1.25, $1.85. For those to be met in the future, you need to take out where you're meant to get rejected and put in new lows, because what is meant to happen is new lows. If we don't see that, we catch support on the way down and we flip it into support, you're no longer on that bearish path. There's only two ways the market moves. So we're now going up, and it's giving you those targets, $1.25, $1.85. So we know even before having this potential move down, we need to get up into that in the first place. And in today's video, I've shown you all the reasonings for why I'd assume it will get up there. We have the Fibonacci's going from here to here, back on the daily time frame. Earlier in this video, we've broken through the golden pocket. So all of these become targets. As this is above the 0.5 Fibonacci, it's likely that we continue higher. So our technical target out of this move will be between 100 to 220%. We'll just call it 200%. It's likely that we do get all the way up to there because we're seeing a lot of support in that area. So that is it from me today. One final thing that I could show for further confluence is going from this high, which is that range high at the moment. And then we can see even further confluence. Look at the 1618 in between these 2 points. Look at the two targets, suggesting that eventually we will get up there. And so that would be the process where we, of course, let's say we get rejected, break through the golden pocket, flipping it into support for the continuation high. And along the way, we're going to meet all those targets. Thank you so much for tuning in. Make sure you like, subscribe, comment, and share. And if you want to get educated by myself, use the links underneath this video. Head straight to the website or to my Twitter for more information. I'm going to play a little clip right now for what you can expect. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click Take Action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.